Okay, oil down. Hopefully, the sides in the Ukraine war are moving towards some kind of a ceasefire. Tomorrow is the deadline, though, when new U.S. sanctions on Russian oil producers Rosneft and Lukoil are set to take effect. India and China, the two biggest buyers of Russian oil, have begun, apparently, to curb their purchases. We're joined by Vikas Dwivedi, who is global energy strategist at Macquarie Group. Thank you very much indeed for joining us. It's a tough day because we've got talk of peace in the air, and that's affecting oil, apparently. But just remind us, these sanctions on, leaving that out for now, these sanctions on the Russian oil giants are seen as a serious business.
Absolutely. They are serious because they're very targeted. Previous rounds of sanctions have been a little bit more general and loose. These are very specific to those two big companies you mentioned. And I think that's making it a little bit tougher for all of the normal workarounds that the oil market has developed for sanctions. And this isn't recent, right? This is going back decades. It's the ultimate cat and mouse game. This is a little bit more specific and more targeted set of sanctions.
I guess the question that leaps to mind, though, is will the oil leak out once again? Will the gray market figure out ways to get it out?
Yeah, we think it'll be a process that at the beginning, the oil is going to get restricted and constrained. It is difficult for even intermediaries right now to transact with oil that was bought from those two companies. And maybe more important than anything, the big buyers have really backed off. India and China specifically, really, it's largely India has stopped buying. And we think, the last transactions will be tomorrow. So, yeah, we think you're going to see a loss of Russian oil. But to the second half of your question, will the gray market eventually do its thing? And we think the answer there is yes. It's hard to exactly know when and all the different routes and mechanisms, but the profit motive is just going to be too strong if Russian barrels are deeply discounted, $20, $25 a barrel below the market. People will figure out a way to do it.
Yeah, I mean, when you consider world oil flows are 100 million barrels every day, our world oil consumption, it's hard to keep track of that tidal wave of oil going around the world every day.
It is. The gray market fleet is really large. And, there's been enough sanctions over so many years around the world that there's a lot of workarounds that are in place. And one of the assumptions has been, the enforcement and the penalties for, not adhering to the sanctions have also been a little bit loose. So we'll see how this round actually looks, right? Like, is it worth the risk to do transactions with sanctioned barrels? History has been a definitive yes, it is. So we'll see if this one follows that trend.
It's interesting. I haven't seen much public pushback from India or China on really extraterritorial measures by the Americans. For example, they've threatened these secondary sanctions that could hurt financial institutions or could hurt insurance companies. You think New Delhi and Beijing would be indignant about that?
Well, there certainly has been some of that, with the a lot of the Indian, officers that are, part of the government. Initially, they rolled out and said, look, we need our own sovereign, kind of goals in terms of energy security and who we buy from, et cetera. But that rhetoric, to your point, has died down and it's gotten a lot quieter. And, the companies involved, they've been fairly vocal in saying they will adhere to the sanctions. China, similar. We didn't hear as much initially from China to begin with, but they've largely been going along with the sanctions requirements.
Before we let you go, we've only about a minute. What's your call on the global oil price over the next year? Do you see a strong updraft or downdraft? I know it's impossible to answer categorically.
Yeah, we see a big drop in price coming, even with the Russian sanctions and the oil coming out of the market for a while. The reality is there's just way too much oil being brought to the market from new growth and returning supply that was off the market, from OPEC. As an example, the U.S. is still growing, Brazil and Guyana. So you've got a really wide array of sources of new supply. And demand is okay. By the way, demand actually looks pretty good, all things considered. But it's not, in our estimates, demand is only growing at about 1/4 of the rate of supply this next several months. So, we see a big down move. The catalyst has to be, though, the significant buildup of oil on the water has to arrive on shore in visible areas, right, like the U.S. and Europe. If it's all China and it's all offshore, the price pullback may not actually happen the way the supply-demand balance suggests it should.
We'd better jump. Thank you very much indeed for joining us. Vikas Dwivedi is a global energy strategist at Macquarie Group.